You don't want to miss this episode. We're going to talk about critical illness insurance. Did you know you're 5 times more likely to have a heart attack, stroke, cancer prior to age 65 than you are to dying? Lots of people have life insurance, but most Canadians don't have critical illness. With the increase in claims, it's something every Canadian should look at. We're going to break it down. What is it, when you should use it, when you should avoid it, and how do you structure it? Hi, everyone. Welcome to Control and Compound with Darren Mitchell. I'm your host, and joining me today, as always, Christina Wyatt, wealth coach at Control and Compound. Christina, how are you?
Hey, Darren. I am doing excellent. How are you doing today?
I'm doing great. Excited about critical illness. Another topic came from listeners, so thanks for listeners for reaching out and asking us about it. Before we jump in, Christina, what do you got to say?
Well, if you're listening on your favorite podcast platform, I'm just going to remind everyone to please subscribe and leave that 5-star review. And if you're listening or watching on YouTube, make sure you like, subscribe, and hit that bell button so you always know when new content is coming out.
Thank you. Thank you. Thank you for listening. Thank you for subscribing. It means a lot to us. Okay, Christina, we're gonna talk about critical illness insurance today, and let's start right off the bat. What is critical illness insurance?
Yeah, so I'm super excited to talk about this. I don't think it's talked about enough among individuals, business owners, everybody. Critical illness is a policy that you can purchase. There's lots of different ways we can structure it, which we're going to get into. But essentially what it does is if you are diagnosed with a critical illness, so think, cancer, stroke, heart attack, those types of biggies, you live for 30 days. They're going to send you a tax-free check for the lump sum amount that you've purchased it for. So this is a benefit for the living. This is something that you don't use it when you die. This is for those that have that critical illness, survive, and need cash.
So who gets the check?
The owner of the policy. So the owner of the policy is going to receive that tax-free check, and it's not allocated to anything in specific. You can use it for anything that you want, right? And that's what we're going to dig in today about how important it can be to have cash on hand in those troubling times. Like that is not a great time getting diagnosed with something like this, right? So having cash on hand always makes everything better in that regard, right?
Okay, so I referred to a couple of stats on the intro there. But we were at a recent conference, and we were amazed by the stats. So, Christine, I know you're big on numbers. Can you break down some of those stats we have on critical illness likelihood of a claim?
Yeah, so we were at the conference yesterday, and we were looking. They put the stats up on the screen, and it was quite astounding to see. For a 30-year-old, it's only about a 5% chance of them dying before age 65. It's not a high chance there. 41% will get a disability, 19% will get a critical illness before reaching 65. Like that is, 50% of 30-year-olds are going to become disabled or critically ill or die before the age of 65. That's 50%. That's a large number.
Okay, I'm sorry. Did you just say 50% of 30-year-olds are either going to die before 65, become disabled before 65, or have a critical illness prior to age 65?
Yeah, that's the stat that they had on the board.
That is huge. And I bet you most Canadians are covered at best for one of the three or zero of the three, maybe two of the three. But those are big stats, 50-50 chance.
Yeah, and you hit 40 and you're only down to 45% chance. Like you're still up there at age 40 that this is going to happen before 65. And then looking at age 50, it was 35%. So the likelihood is definitely there. And I think there's usually a big focus. We've done our podcasts on disability insurance in the past. And if you haven't seen that one, definitely go back and check it out, because we are firm believers in having this type of coverage, and for very good reason. These are the numbers, right? The numbers don't lie. These things are happening to Canadians every day.
Okay, that's amazing stats. So the other thing when we talk about critical illness is, well, let's face it, 50 years ago, if you had a heart attack, stroke, or cancer, you usually died. Like that, but the survival rate now with the advances in medicine is just unbelievable. Like more than 90% of Canadians survive their heart attacks. And 63% is the likelihood of surviving at least 5 years after a cancer diagnosis. So again, huge survival rates for cancer, stroke, heart attack, and these are getting better and better every day. I just saw a recent thing. They came out with a new Parkinson's discovery. They identified a gene, like some exciting stuff coming on. Now we're going to have AI coming out there. So we think some of those medical developments could even be accelerated to start, making people survive illnesses they didn't survive before. So huge survival rate. And we're going to get into all the different illnesses or what illnesses are covered. But really, at the end of the day, the big three are heart attack, stroke, and cancer. Okay? Heart attack, stroke, and cancer. Cancer is going to represent 67% of claims out there right now in the critical illness insurance world. And heart attack and stroke are 24%. So that's like almost 90%, give or take. 90% just on heart attack, stroke, cancer. Those are huge. Then we get another 6%, blindness, organ transplant, MS, and Parkinson's combined represents 6%. And then all the other illnesses we're going to talk about today represent 3%. But heart attack, stroke, cancer, those are the big ones that affect Canadians the most. Okay, Christina, what's next?
Yeah, so you mentioned those covered conditions and the ones that are coming up at claim time the most, but really inside of one of these contracts with the majority of companies, the companies that we work with, there's usually 24 to 26 illnesses in there that are covered, and they're actually adding them all the time. When this first came out, there was 100% not 26 illnesses that were covered on this page, so they're regularly updating it. Now, obviously, the big ones are the cancer, heart attack, and stroke, but you look at the list that they have, paralysis, Parkinson's, severe burns, loss of speech, loss of limbs. So lots of things that are covered under this plan. So it is for an illness though, right? When we're looking at it. So this is what it's, some people get it confused with disability insurance. And what happens with disability insurance is that your monthly income is covered. So you have a monthly income coming in that's going to get covered because you've been disabled due to illness or injury. So there's a difference there. Whereas this is just one big lump sum check that you're going to get because you've been diagnosed with this illness, which can be used for, we've got lots of stories of ways that these different, these amounts are used for medical care, family vacations, really whatever you want to use. So just to kind of differentiate the two is that disability is to cover your monthly income. This is to give you an influx of cash when something bad has happened and you need access to, money, right? We talk about that all the time. Having access to your money is so important. This is, important as well because having that cash available is going to be important. So yeah, 24 to 26 illnesses. You have to live 30 days. So that is an important part. You live for 30 days, then you submit the claims paperwork. They're going to get reports from your doctor, and then they're going to send out that tax-free check to you for you to be able to cash and use as you want.
Yeah, that's a great distinction between disability and critical illness because people get these confused all the time, right? Like you could qualify for disability and not for critical illness or vice versa, right? And disability is not going to give you a lump sum to go down to the States to get treatment. It's not going to give you, probably not pay for 90 or 120 days before the disability kicks in. Then it's going to be a small amount monthly. Critical illness is a lump sum if you survive 30 days. And I have a lot of critical illness and a lot of life insurance. My wife has planned to not pull the plug till the 31st day so she can get the critical illness and the life insurance if that's the way I go out. So, you can claim both the critical illness and the disability and the life insurance if all those things were to happen, but you have to survive 30 days for the critical illness. And Christina, you talked about some of the stories. Yeah, we got amazing stories of critical illness. I'll just share one. I've got a friend of mine who's successful healthcare practitioner, and critical illness not just on him, but he had it on his spouse who wasn't working at the time outside the home, and the non-working spouse, was diagnosed with breast cancer. Now, if you're a spouse and your spouse has cancer, would you rather be at the office or be with your wife or husband at all their medical appointments? So by having coverage on not just the high income earner, but perhaps a stay-at-home spouse or a lower income earner, this individual was able to take months off work so he could focus on his wife's recovery. And it was a great recovery, and that was, probably 10 years ago now, and they're happy, healthy, everything's great. But going back, you can't buy that time. You can't replace that ability to say, you know what, I'm not going to show up to work for 3 or 4 months so I can focus on the health of my family. That's powerful what you can provide to people in time of need.
Yeah, absolutely. And we see it as well. You hate to think of it, but you can get these policies for children as well. And if something, God forbid, ever happened to your child, you are not going to be at the office, right? You're going to be with them. So having that money there, and the money to be able to go get trial treatments, and that happens a lot. A lot of individuals are seeking outside of Canada treatments, and they're not cheap, but they work. A lot of the time they work and they do very well. So if you've got a couple $100,000 that you have on hand to be able to go out and get that additional treatment, seek advice from other doctors around the world, that can change big things. We've seen it. We have we have individuals, clients that have used these funds specifically to go to the United States and have these trial treatments and have these trial surgeries that are not available to them in Canada, and they have survived. They've survived it, and they were very happy to have that extra cash. And these are high net worth individuals too, right? It's not like they didn't have the money, but if you've got a couple, you got 500,000 extra coming in, well, you weren't going to think twice to do it anyways, but it's a lot nicer knowing that extra cash is coming in and it's available to you to be able to go and do what you need with it. And maybe you throw in that trip to Disneyland as you're down there, right? Because you've got the extra cash available. You can do what you need to do to survive the illness. Some people really, they have, we've had it where, people have the heart attack, and we said what the stat was, 90% of people survive heart attacks. They're usually out of the hospital within like 3 to 4 weeks sometimes too, and they're back to normal.
Sometimes days, yeah.
Yeah, days. And they go out and they buy themselves a new truck. Like, you can do it. You can do what you want with this money, right? It doesn't have to be used, but it does have huge impacts in time of need as well. When you have that extra income sitting there, you can make decisions that you normally wouldn't be able to make because it's available. So
yeah. I mean, just picture a diagnosis for yourself or a family member, and they said, great, it's going to be another 6 months before we can do that, or 12 months or 18 months before we can get you into this person or that person. And then, you knew you could go to another country tomorrow and get that surgery to save, potentially, hopefully save that life of a family member. Would you like to have cash to be able to do that? Like, that's the healthcare system in Canada. The reality is it's probably going to get worse before it gets better, if it gets better. The wait times are increasing. I like ready access funds to take advantage of treatment faster. Pay for speed might save your life.
Yeah, absolutely. And we have those. So we've got the illnesses covered, but there's actually some other benefits that are typically included as well. So Darren, I know we wanted to touch on the early intervention benefit.
Yeah.
So what that one covers.
Yeah, let's talk about the early intervention benefit. So, what if you get diagnosed right away, right? What if it's as soon as you get that cancer, you're stage 1, and you get it diagnosed, and it, hardly affects your life. They caught it in time. They say, woohoo. Well, they'll advance 25% of the critical illness insurance benefit up to $50,000. And that won't affect your critical illness benefit. So if you had $200,000 of critical illness, they're going to advance that 25% up to $50,000, and you'll still have $200,000. So again, you catch cancer early, there's still going to be a payout, even though it wasn't really life-threatening. So that's huge. And then, Christina, we both love the living care benefit. This is huge. Now, this is only one of the carriers we deal with offers this, but the living care benefit, Christina, can you walk us through that? Because to me, that's probably almost as equally as important as the critical illness, having gone through what we did in my family.
Yeah, so long-term care insurance is something that there was products out there. I don't even know if anybody actually sells the product on its own anymore. I think it's kind of gone by the wayside. Not many people used it, but it is super important because, down the road, if you were to end up in a long-term care facility or you needed long-term care in your home, there's we have insurance for everything else. Isn't there an insurance that's going to help cover us with some of those costs? And Manulife actually did this great thing with their critical illness where they lumped the two together, and it's included on all of their critical illness benefits, but it's called a living care benefit. And if you have to have the diagnosis or the definition of needing long-term care. So I don't know the exact definitions of exactly what you need, but your doctor is going to be able to tell when you need long-term care, and they're going to pay out that critical illness to you monthly monthly instead to cover those costs. So if you're living at home, they're actually going to pay out 1% monthly. And if you're in a long-term care facility, they're going to pay out 2% of that amount. So, you have a large critical illness policy. It's a good chunk of cash that's going to be coming in to cover that long-term care facility payment should you need it. So, you've gone all these years without needing this critical illness. Well, there's a good chance that, if we get older and we're living that long, that we're probably going to need someone to come into our house and help us, if anything. And this extra benefit added is really neat because it's going to do that for us.
Thanks for listening so far. If you're watching on YouTube, make sure you like, subscribe, and hit that bell button so you always know when new content is coming out. If you're listening on your favorite podcast platform, please leave a 5-star rating and leave a review and subscribe. And if you are interested in learning more, please visit our website at controlandcompound.com to sign up for a free education session with one of our wealth coaches.
Yeah, you think that's huge. I mean, you go into a long-term care facility, I mean, you could be looking at hundreds of dollars, $100 a day, $200 a day. You start adding that up, you're 30, 40, 50 grand, depending upon the province and that. I know my dad at one point was spending, I think it was almost $3,000 a month at one point. Then it got adjusted and stuff. But if you had a $250,000 critical illness benefit, you didn't have a critical illness, but you got something else that puts you in a long-term care facility. Well, now you're going to have $5,000 a month of money coming in to pay that long-term care facility. And I mean, not only can that help you and provide you the care you need, but it also protects the spouse who doesn't have to deplete all the family assets to pay for the long-term nursing care. So, you're not just looking after yourself, but you're looking after your family with this. So love that. And then, Christina, we got lots of riders now. There's all kinds of different riders. Some of them we like more than others, but talk us through the main riders and what exactly is a rider. A rider is just an add-on to an insurance product.
Yeah, so I actually heard someone, another advisor, use a great word for riders. So riders are like bundles. It's bundling extras with your insurance, and I love that. I was like, I'm going to use that. It's a bundle.
We'll steal that.
Yeah, we're gonna steal that one. You can bundle it. So there's a couple little things that you can bundle with your critical illness. Now, for me, critical illness is important just as it is. It's an insurance, but they've done a few things to kind of spice it up so that you can, kind of get some money back if you were not diagnosed with a critical illness. So there's one that's called a return of premium on death. Now, this is a pretty inexpensive one to add to the policy if you want it. But what happens there is that if you don't live that 30 days, they will return all the premiums that you've paid to your beneficiary. So somebody is still going to get a portion of those premiums that you paid if you didn't receive that critical illness benefit because you didn't live that full 30 days, right? So we've got that riders one that we can add. Another rider we can add is a disability waiver rider. So just like what we do on our insurance policies, if you were to become disabled, by definition, they will waive the premium and you no longer have to pay for that premium any longer. It's going to get paid by the rider for you or the bundle. And then this last one comes up a fair bit when it comes to critical illness, which I believe sometimes can overcomplicate things with it. It's not a bad thing, but it can overcomplicate and it can make critical illness look more costly than it has to be. Like the cost of critical illness are actually quite inexpensive. And we're going to talk about different setup structures and payments. They can be pretty inexpensive. Like a couple Starbucks coffees a month can get you critical illness to some degree for most people. But what you can do is you can add this rider called a return of premium at surrender. And what it is it's almost like a savings account for if you don't use it. So what happens is you pay these monthly or annual premiums every year, and there comes a time in the future, a lot of carriers are 15 years, so insurance companies 15 years, where if you cancel the policy, you're going to receive all of those funds back. So all the premiums that you put in. So people call it almost like a forced savings account, where you have that savings there. Heaven forbid you did get diagnosed, you've got that large lump sum. If you don't get diagnosed at year 15, you can start to cancel it. Every year it continues to grow until eventually you're at the same amount you put in is the same amount of the benefit. And for something like that to work, you do need a longer payment structure for it. It can't be a term 10. We're going to discuss that in just a bit. So it has to be more of a longer term permanent product to do that. But you're paying a lot more for it. So just because you see, if you're looking at pricing out there, take a look at what it looks like with the return of premium so that you get that money back. And then it becomes a savings account. There's no interest on it or anything. You literally just get your money back is what you're going to get. Or looking at it as an insurance, right? So just like your car, your home insurance, if there was a fire in your house kind of deal, there's going to be a price for that type of critical illness. And then there's going to be a price point for a savings account included in your critical illness. And both can be used. So those are pretty much the riders that were the bundles that we can add to a critical illness policy that a lot of people will take a look at.
Yeah, and I love that conversation you had on the return of premium on surrender, and I get it, right? As someone who's been in the insurance business a long time, I understand advisors are able to go in and say, "Hey, Christina, you should get this critical illness. It's going to cover you for these 26 things, going to give you a lump sum." And the great news is, if you don't get sick in 20 years or so, you get all your money back. So really, there's no risk, right? Like I understand the idea of return of premium. But in practice, if you have the money and you get lots of money and you can do that and you like that savings and you like getting the money back, that's great. But in reality, what typically happens is advisors sometimes sell the sexiness of return of premium to the detriment of the face amount. So what I mean by that is you go in and the couple says, "Oh, great, we can afford $50 or $100 a month for critical illness." And the advisor will load it up with return of premium and all these riders and features, and he comes up with, $40,000 or $50,000 of face amount. But great news, in 20 years, you're going to get all your money back. Well, I would much rather, for that individual, assuming they're not flush with cash, why don't we cover them for $300,000 or $400,000 of critical illness, not have the return of premium, structure it slightly different, but then if they have a heart attack or stroke in year 2 or 3, now there's significant money coming in to really help the family, as opposed to you're making a savings program with the return of premium with a little CI. I'd rather a bigger CI without the return of premium for most people. Now, again, if, some people just like that return of premium, some people have the cash to fund it. There's nothing wrong with the return of premium. Just don't sacrifice the face amount. In other words, how much benefit you'll actually receive to buy the return of premium. Does that make sense?
Yeah, and it kind of puts a segue into our structures and how we can set them up. So with these critical illness policies, we can set them up a lot like life insurance. And we talk about life insurance a lot on this podcast. So you've heard us talk about term insurance. So there's term 10, there's term 20. And what you had just mentioned, a lot of the time, if you can get a lot of critical illness insurance on a term 10 for a pretty competitive price. Like, it's not a lot of money, so you can really load it up. So you can get that term 10. The neat thing about terms in critical illness too, at least at this point, which is great, is that when they renew, they don't renew like a crazy life insurance one where the rates go through the roof. They actually renew pretty close to what it would cost for you to get a new critical illness at that critical illness policy at that age anyways. So I was looking at one the other day for a client, and at the term 10, he looked at term 10, and at term 20, it was the exact same price as if he purchased it, at age 55 instead of 45 kind of thing. So it's nice. You can keep it going. And those term insurance contracts as well will allow you that conversion that we talk about a lot, like with regular life insurance. We can convert critical illness. Just because you purchase a term doesn't mean you can't switch it to a permanent product later should you need it. So maybe bulk up on a lot of that term insurance while you're younger, between 30 and 65, as there's a 50% chance it's going to happen. So maybe give yourself a lot more at that point in time. And then later in those early years after 65, you might just want to take a portion of that, cut it down, and use it as your long-term care, your long-term care conversion, or have it there as extra if you need it. So lots of flexibility. You can get those permanent policies as well, where they're all paid up in 20 years. So a 20 paid up policy, it's done, and you don't have to worry about it anymore. So lots of structures. Pick the structure that obviously works best for you. And like you said, never reduce the benefit for the sake of, saving, to be able to save that. You got to look at both. Just make sure that you look at both angles when you're looking at it. Cause I do think that the insurance component of this is what makes it such a great product. It's not an amazing savings product. Like, it's nice to get your money back. We're not talking returns in here or anything. This is a straight insurance product, and it has done many of things for a lot of people as an insurance product. It's an amazing thing when it's used, right?
Yeah, I love that term. I mean, you could buy. So I'll tell you, at 40, I bought a big 20-year critical illness, and I also have a critical illness to 75. So one covers me up to 75. One's gonna renew at age 60. Well, maybe at age 60, I'll look at this and go, well, maybe I don't need as much critical illness now. You know, the kids are grown up. I don't have the financial responsibilities and liabilities I had when I was 30 or 40. So maybe I don't need as much now because it won't impact me as much financially if I can't work or whatever. So why don't I reduce that couple 100,000 down to maybe 50,000 of permanent, and I can convert 50,000 of that to a permanent that's going to continue on to age 100. So no matter when I have a heart attack, stroke, or cancer, or whatever else could come along, there's going to be a payout. So again, just options. But Christina, just reemphasize your point. Don't lose face amount for fancy riders. That may help you in 20 years. Focus on the shorter term with critical illness and get as much coverage as you can afford. All right, let's talk about ownership. First way to own it, Christina, is
personally owned. So super simple. You own it personally. You pay for it personally. The benefit's going to come back to you personally. You can put these policies on your spouse, your kids, all of your family members, really. And you own it personally. You pay for it personally. So super simple. Personal owned policy.
So that would work. So if I own it personally, I buy it, I pay it, and if the check comes for $100,000 or $500,000 or whatever it is, I get the check. So again, this isn't coverage you're buying for your family. You're buying this coverage for you. You get the check. Okay, you don't have to die. You get the check. Okay, next one, Christina. After personal.
Corporate owned. So we can own these policies inside of our corporations, which is neat. A lot of business owners don't talk about this one as much, and we can purchase it for a couple different reasons. So one would be key person insurance. So as a key individual in your business, like we've talked about, someone, maybe running a medical practice and you are a key person there. Well, if you still need to be able to pay those employees, keep the lights on, those types of things, and you have to take 6 months off, well, it is nice to have a lump sum check, tax-free, go into your corporation, right? So the beneficiary, the receiving party, is going to be the corporation at that point. Then that corporation can go ahead and they can pay the expenses in your corporation inside the corp. They could pay you out a salary. Now you can't. This is not like life insurance where we get a credit to the capital dividend account. So want to be clear there. We're not going to be able to pull this out tax-free from the corp, but the corporation can use it as needed. So just like any other money coming through the corporation, you can use it for all of those expenses, which again, this is an insurance, an insurance for if something bad happens, and that's what it's going to do. It's going to provide you those benefits. So key person's one.
Just one note on that key person too. Like if that key person could be an employee or could be the owner of the company, and if it is the owner of the company, yes, the corporation receives the money and they can pay salaries and bills. But if the owner is covered by a health spending account, where let's say they need to go get treatment in the States and they have a bunch of money on their health spending account, well, the company funds that health spending account and that money is going to flow to the individual tax-free as a benefit. So again, there's huge ways to get money outside of a corporation through a health spending account if you have healthcare expenses, which if you have a critical illness, there's a good chance you will have a healthcare expense. So again, if you haven't listened to the healthcare spending account podcast, go back and check that one out. It'll give you an overview, no cost to set that up. So sorry, Christina, we talked about personal, we talked about corporate. Is that it? Personal, corporate, or is there one in between?
No, just a couple other ways that a corporation could use this, why they might add it. So the key person's definitely one. Great point on that healthcare spending account. I didn't think of that until you said it, which is, amazing. Another, you'll hear a lot about split dollar critical illness. So that's a tax strategy that some advisors will sit down and use where, the corporation can pay for the policy and there can be some tax advantages for the key person or the business owner. That can get into a little bit of a gray area. So just make sure when you're setting it up, you're keeping and you're checking out all the boxes and making sure that you're putting it all on side with CRA. And again, it does tend to make it more complicated for someone to get, it kind of puts a lot of, they make it sexy, like you said, but it kind of takes away from the insurance factor of it. And what we really want the critical illness for is the insurance. Another one is buy sells inside of corporations. So a lot of buy-sell agreements are set up. And most of the time, hopefully all the time, the life insurance is set up for it. But there are also disability, inside a buy-sell, a lot of the times the business owners will put in what would happen if they became critically ill or if they became disabled and couldn't work. Well, there is coverage that you can purchase as buy-sell coverage that will fund that for you. So you're not coming up with those funds through the corporation to be able to pay out that other business partner. It's going to fund the corp through the critical illness policy, and you're able to fulfill those buy-sell agreements. So not that it's a different coverage, it's just some different uses that a business owner might use that for.
But that buy sell is huge, Christina, because we've paid a lot of buy sells actually, and unfortunately or fortunately, depends how you look at it. I'm glad the people had the coverage, but the whole idea of a buy sell is great. If Christina and I are partners and she dies, I don't want to be partners with her husband. So great, I want to have life insurance in place that we could buy out the partner. But what if the partner doesn't die and they just have a massive stroke and now they can't work? Well, your buy sell agreement might not, have that spelled out what's going to happen. And even if it does, that great, I can buy my disabled partner out. Where am I going to come up with the funds? So, if the life insurance, if the person, I was like, oh man, Christine, if you had died, I would have got a big lump sum life insurance and I could have used that. But you got sick and there's no critical illness. So, do you continue on working with a partner who, maybe has a massive stroke and can't really function? Or do you scrape together the money to buy them out? So having that critical illness in place could really save your business.
Yeah, absolutely. So one of the last questions, one of the things that I want to touch on, and we get this question from individuals as well, is critical illness for me? So who is critical illness for? And it's an odd answer. You wouldn't think that this was the answer, but Darren, do you want to answer that question? Who is critical illness for?
Yeah, it's for the healthy people. That's reality. You need to be healthy to sign up for this. So people say, I'm in great health, I don't need this. Well, no, you're the exact person that should be signing up for this, because if you're not healthy, it's harder to get critical illness than it is to get life insurance. They're going to ask different questions. They're going to ask family history. Critical illness is for the healthy. Christina, what do you have to add to that?
The big thing is it's the healthy that's going to survive, right? Like if you're healthy, you're fit, and you have a heart attack, you're the one that's walking out a week later. Like you're the one that's walking. If you are, you've been diagnosed with a cancer, but you've caught it early and you've got it all taken care of, you're healthy, you eat well, you're going to live. You're going to be fine. It's great. Medicine has come a long way. And if you're taking care of your body and you're healthy and all of those things, this is exactly who it's for, because, the person that's not healthy may not live through a critical illness. The person that is going to, and they're going to want that cash to go out and, look at different alternative medicines and stuff like that. And that's what this is going to do for you. So it is 100%, one, to get approved for it, but two, because you are the ones that are going to need it, because you're going to be the ones that are going to survive and be fine and be okay and maybe buy that new truck or, use it for what you need it for, right? Like that, this is who's going to get those payouts, are healthy individuals.
Yeah. So you need healthy individuals. We need single individuals. What if you're single and you have a critical illness? Who's going to look after you if you don't have a family to look after you? If you're a family member, then great. You want to get everyone insured. And again, we got our kids insured when they were young and healthy to make sure we locked in that insurability. So, Christine, I know you're passionate about critical illness and people in their 30s that just when you see the impact of what it does, and then people in their 50s, seems like everyone's getting sick or something's happened. So there's not really an age that it doesn't make sense at. But you're also passionate, and we share this one, and we're passionate about critical illness, but we're also passionate about Make-A-Wish Foundation. And Control and Compound's got a neat give back to the community. Can you talk about what we give back when someone purchases a critical illness through Control and Compound?
Yeah, so the Make-A-Wish Foundation in Canada, it grants wishes to children with critical illnesses. So you can see how this ties in. And, I've been part of this foundation for a long time now and volunteering and working with that Make-A-Wish community. My family's involved as well. And critical illness can have a huge impact on individuals and you know, our children, and it's devastating as it is, but these wishes that Make-A-Wish does, they've done the research and they actually help the children get better sooner because they have that positive wish. They've got brought to Disneyland. They've had, you know, all kinds of different things that they do for these children. It's amazing when they grant these wishes to meet celebrities and everything else. They've actually seen that it changes the dynamics of their treatment and they get better sooner from these wishes. So they are doing incredible, amazing things. And you can see how it kind of ties to the critical illness that we sell. I am very passionate about making sure when I talk to anybody that we bring up this coverage because it's important to know about because it does change lives, just like these wishes change lives. So what we do is for every critical illness policy that we sell at Control and Compound, we make a donation. A portion of that goes towards the Make-A-Wish Foundation so that they can spread wishes across Canada to these children that are fighting these illnesses as well. So it kind of, you know, it's going to protect you. It's going to keep you, you know, it's going to protect you and your family. And we're also going to be able to give back to some children across Canada that need that uplifting wish that's going to get them through their fight too.
That is fantastic, Christina. What a way to wrap up. Nice, nice dedication, nice commitment. Thank you for everything you do. Thanks for the listener. Thanks to the listeners and people watching on YouTube. We appreciate you. We'll see you next time. Thanks for listening to this podcast. If you're listening on YouTube, please like, subscribe, and hit that bell button. If you're listening on your favorite podcast platform, please leave us a 5-star review and subscribe. And if you want more information, check out our website, controlandcompound.com, and you can sign up for an education session with one of our wealth coaches.